Our first speakers are Guy Adami, who really doesn't need an introduction. We all know him probably most notably from CNBC's Fast Money. We also have Travis McGee, the Nadex Chief Commercial Officer. So, with that, before I flip it over to them, I do have to share a disclaimer, and I do not know why I'm having such a difficult time, but I will get the disclaimer up there at some point. I do want to share that this, and this is important, so you'll get a chance to read it in a bit, but trading does indeed involve risk, that any trading decisions you make are solely your responsibility and done at your own risk. And lastly, this is an educational session. Please don't construe anything that we say today in any of our sessions as a buy or sell recommendation. We're doing this for your education purposes only. With that, I'd like to flip it over to Guy and Travis to talk about the trader mindset. So, all right, there we go.
Yeah, good to go. And if it helps, I am seeing the schedule for today on my screen. I don't know if that's the slide that's supposed to be up, but I'll let you handle that. Guy, welcome. It's good to connect again.
T, well, thanks for having me. And first of all, you guys and gals are lucky to have Travis on board. I've known Travis for the better part of 11, 12 years now, and he's as squared away as they come. U.S. Marine, the guy just puts his head down, does his thing, and I know what a difference he's made at Nadex, and it's thrilling for me to be here. And quickly, Travis, before we start, and this is going to get into our conversation, Todd read that disclaimer, and it sounds scary, and it almost makes you feel like you're by yourself when he says things like, trading involves risk, and any decision you make is yours and yours alone, and sort of puts you back on your heels a bit. And I understand that, totally get it, but what we're trying to do here is to build a community, and so you're not alone. And listen, when all's said and done, the decisions you make are your decisions. But what we're trying to do is help you get up the curve to learn how to make those decisions, if that makes sense. So although that disclaimer makes you feel really alone and out there and, oh, my God, understand that we're trying to be all in this together, and we're trying to help. Anyway, Travis, I'll throw it back to you.
No, I think that's a good point. And education is paramount. I don't like talking badly about anyone else or any other organization. There's a lot of great things happening in this modern world where everything is at our fingertips. Education is some of that. Some people do education really well, others perhaps not so well. And one unfortunate trend we're starting to see with this evolution of online trading is the fact that a lot of education is going away. In some places, it's, hey, I'll provide you with access to the financial markets, have fun, have at it, without a little bit of hand-holding in how you get there and how you successfully navigate those financial waters. I know you and I can speak back to this, Guy. When I first came onto the trading floor in the mid-90s, when you were trading on the floor at Goldman Sachs, education was paramount from day one. It was constantly learning, not so much about the financial markets, which was key, and how to trade. You can teach anyone to trade. What's hard is the mindset and the discipline that comes along with trading. Same thing. I mean, I say it all the time in my own training. You can teach anyone to be a Marine. You can teach anyone to be a Navy SEAL, whatever. You use whatever you want to use. But if that person doesn't have it inside of them, the discipline and the focus to laser in on something and to really put the effort in that's required, it's going to be very hard in the end to be successful. Correct me if I'm wrong.
No, 100%. I'm glad you said that, because one of the things I've said, and you've heard me say this, and I'm sure it gets boring after a while, but there are a lot of people on. And by the way, thank you for joining, folks. I should have said that as well. I understand, I think Travis and Todd do as well, how valuable time is, and the fact that over 900 people signed up, and we're probably going to have more than that on the replay. I want to thank you for spending your time with us. So, your time is as important as anybody else's, and the fact that you're here is wonderful. So to Travis's point, I can teach mechanics as well as anybody out there. I'll say that, I'll stand behind that. I can teach mechanics of trading without question. What's really hard to teach, and I think what Travis is sort of trying to get drilled down to, is instinct, right? And the trader mindset and the things that are necessary on top of the mechanics to be successful in this. And listen, make no mistake, it's a very difficult thing to do, but the fact that you're here speaks volumes, and obviously you want to be successful at it. And hopefully over the next 45 minutes or so, and by the way, folks, feel free to ask questions. It's really important. We want to make this interactive. So whether it's on the chat function or other things that you're using, Todd's going to be monitoring it. Ask any questions you want, but over the next 45 minutes to an hour, the hope is obviously that we can assuage some of your concerns and sort of help you understand better the mindset of what it takes to be a successful trader.
Sorry about that, guy. I had to unmute myself. So let's get into this a little bit. I said this morning. So for those who don't know, I do these morning updates at the start of every morning, and there's a little bit of a method to the madness. One is to provide our prospects, those who are currently members of the exchange, with a early morning update. What's going on? What happened overnight? Where the market's heading? It's also a good habit for myself to get out of bed, get my mind right, understand that I need to go in, see what happened overseas, see what's happening in FX, see what's happening here in the US, what's on the docket for the day ahead, what could potentially move markets. I think there's an important distinction we have to make. One, that discipline's required, but that discipline is required exponentially more for a trader than an investor. There's a distinct difference between buy and hold and buying something and looking for that long-term return and doing what we do at Nadex, what most traders do on the trading floor, what a lot of the high-frequency desks are doing, what a lot of proprietary shops right down to the street here in Chicago are doing, which is taking advantage of intraday short-term moves. It's important that you have your mind in a position to where you're locked in, you're ready to go, and you understand what's ahead of you, because you don't have that grace period. You don't have that
luxury.
That luxury, exactly, of being wrong. You can be wrong, and a lot of times, more often than not, you will be wrong, and you have to be disciplined enough to cut your losses. And we'll talk a little bit to that. But you don't have that luxury that you have in that long-term investing, where something can go against you for a couple days, a week, a month, even a couple of years, and it's still okay. So you really have to make sure that you're dialed in to what's going on. So one of the things that, Guy, I know we've kicked off, and it's not only, again, it's certainly for the benefit of all those that are listening today and those who were unable to make it today, but it's also for the benefit of Guy, myself, and Dan Nathan, the macro setup. And making sure that we're dialed in on a daily basis as far as what's going on in the market, so that we can share that with everybody, and you understand what those key levels are, and you understand what the different dynamics of the market are that could potentially impact that trade, and having all of that to hand, being able to take notes and prepare yourself for a given trade, because a lot of trading is that preparation element.
It's all, and I appreciate you bringing up the macro setup that Dan and I have now done since October. Actually, it's amazing. We're 3 months in, and we're really excited about how it's been going. We're really excited to carry it through, and we can talk about that probably at another time. But something that Travis mentioned, amongst the many things he just mentioned, is really important, and it's the difference between being an investor and being a trader. And make no mistake, folks, there is a distinction. And I think one of the things that happens with most lay people, they try to wear both hats. And what I would submit to you is, I know I can't do it, and I'm not suggesting I'm anything special. I'm not. But I think what winds up happening is this, and I'm sure a lot of folks are sitting at their desks right now and nodding their head. This is what I'll tell you. When you try to wear both hats, if you buy something as an investment, for example, let's say you bought Bitcoin 3 days ago as an investment, and within 2 days or 3 days, it's up 13, 14%. Your natural instinct is, oh my God, I'm up 13% in 2 days. This investment now becomes a trade. Okay, number one. Number two, let's play this game. You bought something as a trade, whatever it is, a stock, a commodity, an index, and in 3 days, it goes down 15%. As a trader now, you say to yourself, well, wait a second, I still have my views are still strong. I'm going to turn this into an investment. So what winds up happening is, for so many people, an investment that does really well off the start becomes a trade, bad. A trade that goes really bad at the start becomes an investment, bad. And you can't wear both hats at the same time. So pick one or pick the other and stick to it, right? There's a discipline involved in both. And unfortunately, when you're a layperson, you wind up conflating the two. And that, to me, Travis, and you can correct me if I'm wrong and push back, to me, that ends in, at the end of the day, it ends in just disaster. And you're throwing your hands up and saying, I can't do this anymore.
Yeah, and we'll get into that a little bit. That certainly getting emotionally attached to something that's not real. I mean, they're just numbers on a screen, but it's amazing how emotionally attached people get to something, as if that index or that stock or that commodity actually, loves them back, which isn't true. And then it's, being dogmatic in your views, which you talk about, and we can speak to that as well. I think it's important to note too with Nadex, and I know we've got a lot of our Nadex traders on here, but for those who are prospective, looking into becoming a member of the firm, trading Nadex markets, or for those of you just looking for some insight on trading in general, I think it's important to note when it comes to Nadex markets and short-term trading our markets, one of the common misconceptions with the binary option is that in essence, it's a bet. It's just simply a bet. In theory, it's as simple as that, right? It's a yes/no question, right? Will the S&P 500 be above 3,600 by tomorrow? Yes or no? That's a binary option. Very, very simple in nature. However, at Nadex, with the binary options, you are able to trade these products no different than you can trade an index, no different you can trade an individual stock, no different than you could trade an option, a future, you name it. You can trade in and out of these, and that's where the discipline comes. Where people more often than not at Nadex find themselves getting into a problem is they'll buy that, I'm just spitballing hypotheticals here. Is the S&P going to finish above 3,600 tomorrow? And you buy basically you pay $80, which is an 80% probability that it is, hoping that you can make the $20. And by and large, what happens is people place that trade and it's more or less kind of set it and forget it. And let's hope that outcome happens. But more often than not, this is what could happen, right? So you buy that $80 trade, it trades up to 92, 93. Someone looks at it, they've still got another 8 hours left in the trade, but they're unwilling to take that 92, 93, and instead of making the full 20, go ahead and take the $13 and move on to the next trade. That, I would submit, is the difference between a trader and someone who's very novice or hasn't quite picked up on the ability to set that discipline when trading and say, hey, if I get this within a certain time frame, I'm going to be disciplined enough that I'm going to take that off the table, and I'm going to roll that into my next trade. And the same can be said for the downside. I don't want to just use an upside example. Downside as well. We have to be disciplined in the downside when that trade goes against us, $5 to the downside, that you say, hey, $5 was my lower barrier. I'm out of the trade. It didn't work out as planned. I'm now moving on. I live to see another day. I'm moving on to the next trade.
That's such a great point, Travis. The outcome is binary. It's yes, no. The outcome is binary. But in between the putting on the trade and the outcome, that's a fluid situation, and you can absolutely trade around that. So you don't have to just sit there and wait. Who was that, Ron Popeil or whatever that guy's name, set it and forget it? That's not what Travis is talking about here. I mean, this is a living, breathing thing that you can trade around. So don't confuse binary with I'm either going to be wrong or right. I mean, you can be right and lose money, as it turns out, and you can be wrong and make money. I mean, if you think about it, that's what could happen, because within the time frame of that binary play, things will happen. And again, I understand that that's somewhat counterintuitive, but if you take a step back and think about it, it starts to make sense, because these instruments, it's specifically what Travis is talking about, they're living, breathing things that move in real time. Is that right, Travis?
No, it's 100% right. I mean, so much of this, I hate using the term game, but to use a sports analogy, so much of this game, which is trading, is longevity. It's just longevity. It's no different than anything else. You want to remain in the game for as long as you can. And the longer you remain in the game, the higher the probability is that you're going to be successful over the long term. You don't want to come out of the gates guns a-blazing, not knowing what you're doing, not having the right mindset, not having a trading plan. And we have talked about that. It's important that you have a trading plan. What are those parameters? What's that discipline you're setting for yourself to the downside, to the upside? If you lack that and you just rush in, that's where people get burned, and that's where the excitement of trading loses its luster. That's where people fall out of love with it. That's where people just ultimately give up. And no one wants to lose money, but you're going to lose money in trading. It's going to happen. You have to minimize and you have to mitigate those losses and make sure that you're disciplined enough that no one trade is going to essentially wipe you out, and that you're going to be able to continue in the long run. It's that longevity that you're ultimately shooting towards. And I'll use an example, and again, to use a baseball example, some of the best hitters in Major League Baseball, Hall of Famers, Hall of Fame hitters are batting 300. Think about that. They're batting 300. So 3 out of every 10 times they get a hit. Only 3 out of every 10 times they get a hit in Major League Baseball. Those are Hall of Fame numbers right there. Some of the best traders on Wall Street historically are only right a third of the time. But what they manage is that other 66%. That's what they manage really well. They can let that third work for them and they can let that run, but they manage that 66% of the time they're wrong extraordinarily well. Super, super, super disciplined. You read and you look at a guy like Ray Dalio, there's a reason he's so successful. You read his book. I mean, he's a very, very disciplined man. And it just goes to show that, it like everything, it's mitigating risk and having control of that is paramount.
Yeah, I'm so happy you brought that up. And Travis and I, we've done a lot of webinars together. We've done conferences together. And so we've gotten to know how each other thinks pretty well. And what he said, I'm going to echo, but I'll say it in a sort of in a different way. And he brought up Ray Dalio. So in my world, Mark Fisher, who's still, by the way, trading, is just legendary in the commodities world. And I started my career in 1986, and Fish was sort of becoming king, and he's held that throne for years. And I'll tell you, if you follow me on Twitter, which some of you may, Twitter's a fascinating place. And the other day, somebody was trying to be derogatory and said, it's fascinating. He said, I think he said, at best, they're right 50% of the time. And I felt like saying, if I'm right 50% of the time, I'm in the Hall of Fame, I'm somewhere on an island somewhere hanging out, because if you're right 50% of the time, you should be crushing it. Now, as Travis just said, Fish, who I've heard speak many, many times, will say exactly what Travis just said. I want to reiterate it. What he will say is, I, Mark Fisher, can be right 25, 30% of the time and still make money. Whereas you folks out there, the lay people, can be right 50% of the time, which is historic, crazy levels, and still manage to lose money. And the difference between the two of us is discipline. And this gets into sort of the mindset of a trader and what we're trying to drill down on here. As human beings, we're all emotional creatures, but just by definition, you're emotional. And life is a sine curve. There are great days and you're here, and there are trough days and you're down here. And you go through these sine curves of life. And that's natural. It actually is very healthy. As a trader, though, you got to eliminate that sine curve. You're never going to be a flat line. And it's very hard to get there. Some people are, but you want to sort of, to use a current example, a current term, you want to flatten the curve, and you want to flatten it on the upside, and you want to flatten it on the downside. And one of the hardest things to do as a human being is admit when you're wrong, because let's face it, we all hate to be wrong. And what winds up happening is, and I've seen this, Travis, 100 times, just to use an example. I buy Apple at 125. Let's just throw out numbers as a trade. I'm looking for it to go to 150, and I'm going to stop out at 119. Arbitrary numbers. You wake up the next day, something happened with Taiwan Semi, or Apple announces something, or maybe Goldman Sachs downgrades the stock and it opens at 121, and by lunchtime it's 119, and you say to yourself, well, it's lunchtime, the tape is still okay, my stop was 119, I'm going to get some lunch, I'm going to come back. You come back, now it's 118 and a half. And now this is what you're doing, and I know there are people nodding their heads right now. What you're saying to yourself is, well, I can't sell it at 118 and a half. It was just 119. That was my stop. Let's see how the day plays out. Day ends. You come in the next morning. The stock opens lower, 116 and a half. Now you're paralyzed. Now emotion is absolutely in the equation, and the mental gymnastics go on. And you've made what is a trade an emotional thing when it should be on autopilot. Now, say autopilot because before you put on a trade, and I think Travis agrees with this, you put on a trade before you even hit that button. It's more important to know where you're out if you're wrong than where you're out if you're right. So I'm buying Apple 125 for a trade. I'm stopping out regardless of what's going on in the world. If it breaks 119, on the upside, I'm going to take off a third at 135, another third at 140, and the balance at 150 or something like that. And effectively, it's on autopilot. Now, listen, you can tweak along the edges if things start to move, but the hard and fast rules are set in place. And again, what that does, what that discipline does, in my opinion, it takes the sine curve of emotion out of the equation. So Travis is a Marine. He can talk about preparedness, and we talked about that at the beginning. That's the discipline, and that's the preparedness that you need to have when you put on a trade, T.
100%. 100%. And that's the hard part. That's everybody think, it's common, in talking amongst dinner parties or friends or forums or whatever, medium you're using. When you start talking trading, most talk about placing that first trade as being the hardest part, or actually hitting the send order button. I think you have to flip that mindset around. When you submit a trade, when you put a trade on, it's just started. The hard part hasn't even started. I mean, now you're in the hard part. And to quote the great coach Jimmy Dugan, it's supposed to be hard. If it was easy, if trading was easy, everybody would do it. No one would use wealth managers. No one would put money in a bank. Everybody would just trade if it was easy. It's supposed to be hard, but it's the hard that makes it so great. That's what makes it great. So you have to lean into that difficulty. And the only way you can lean into that difficulty, as Guy was saying, and to be successful at it, is you have to have the plan. So if I can challenge you, one takeaway from this event today, aside from the next two sessions that we have after this, and learning how to use the technology and learning trade setups and stuff like that, if there's one thing you can take away from today, it is that element of preparation. We've got a great period coming up. Things start to slow down. This is a different year than any we've ever seen before. It's certainly going to be a different holiday season. A lot of people are going to be sitting at home. You've got a lot of time on your hands. Use the next couple weeks to improve as a trader. Take some of the educational courses. Go back, watch some of the webinars perhaps you missed. Work on building a trading plan. So as Guy was saying, before you go into a trade, you should know, and by know, I mean pick up the pen, pick up the piece of paper and write it down. Listen, this is the trade I'm getting into. This is my time frame on the trade. If this trade goes to this level on the downside, I don't care what time frame it is, I'm out. But if it trades up to this level, and you can set certain levels for yourself. There's a lot of traders out there to the upside where they say, hey, if I make 50% of my expected profit, so let's use that $20. So we bought at 80, we have $20 of profit potential, and it's a one-day trade. So you get in the morning and it's a one-day trade. If I make 50% of my profit in half the time, so if it's up $10 by lunchtime, I'm out of the trade. That could be a level, right? That's disciplined trading right there. You're setting actual levels for yourself, but you got to stick to it. And it's easier to stick to it when you write the stuff down, you put it on paper, you put it beside you. But even more importantly, it's build a community. Guy and I talk all the time, and we talk about trading. We talk about what's going on in the business world, talk about life in general. It's a community. We know that we can lean off of one another. And I know if guys, if Guy's doing something and it's BS, I'm going to call him out, and the same for me. That's what it is. We're holding each other accountable. Trading's no different. Find yourself a trading buddy. Find yourself someone that you can spitball ideas off of. Let them put their fresh set of eyes on it and see if there's something that perhaps you're missing, and bake that intelligence into your trading plan.
That's such a great point. So I worked at Goldman Sachs, I think, for about 7 years. I actually worked at J. Aron, which is a commodities currency group underneath of Goldman Sachs. And I think to this day, if you call there, they still answer the phone, J. Aron. But that was the trading hub of Goldman Sachs. And literally on the first day, one of the guys pulled me aside and he said, listen, the key to this, if you want to be successful, and I've been working for almost 15 years prior or something like that, you have to take a partner. Take a partner. And I didn't really understand what he meant by that. And then until it dawned on me, and Travis just hit it home. And I want you to think about this. If you were to sort of hone in on a trade, what winds up happening after you've done all the work, when you've honed in on something, you're almost as if you're going to look past the what can go wrong part, because you've invested so much time and energy that you're going to sort of just focus on the good parts and not see the bad parts. But when you take a partner, when you bring in another set of eyes, somebody that you're part of your trading community or a buddy, he or she hasn't looked at it. They have not invested the time in it. They don't have the emotional investment that you do. And again, emotional, I don't like to use that word, but it is an emotional investment. And they'll look at it and say, well, wait a second, Travis, you do know they report earnings on Friday, or you do know they have an investor meeting, or you do know one of their competitors just pre-announced to the downside. They might see things that you may have seen, but you look past because you're so locked in. So again, you want to take another thing away from this, take away you're part of a community now. That means something. So use it and build a cadre of people that you can bounce ideas off. And conversely, hopefully you're somebody that one of your partners can bounce ideas off. So am I onto something there, T?
Yeah, it's so important. Yeah, and it really is. And by taking a partner, this could be anyone. And again, this trading, you have to treat it like a craft. I mean, it really is. You got to fall in love with the process. You really do. And it's unfortunate. And it's certainly not today's day and age. This has been going on for eons, but it seems more prevalent today's day and age. We're always looking for the easy way out. The quick win. Hey, in financial markets more so than probably anything else, for obvious reasons, it's flooded with the, I want to be a quick millionaire. How can I do it easy? I want to do it easy. Just give me the trade, give me the setup. I want to do what you're doing. Wait, I can tell you right now, it's not going to come easy. You may win once, you may win twice. You may have a stretch of 3 that's going to work for you, but that 4th one's going to blow you up. And it's going to come back to haunt you. You've got, in order to, again, and I go back to the longevity bit. In order to survive in this game, you've got to fall in love with the process, and you've got to make it a part of your daily routine. You've got to make it and treat it like a craft. You can't just treat it as a simple little hobby that you're gonna dabble in here and there. You really do. To be successful, you got to treat it. You have to treat it like a craft. And like the trading plan, it's difficult, and it's that community. So find someone that's passionate about it. If you don't have anyone, perhaps you have kids, you have a son, you have a daughter that's coming up. Teach them about the financial markets. Do it together. Take some educational courses together. Open accounts together. Put on trades together. Talk about them. But find that partner who's going to help you along the way, and that you can bounce those ideas off of, and more importantly, that individual who's going to keep you accountable from time to time as you get in there. So I know we're starting to get tight on time here, and I do want to open it up to some Q&A. So if you hadn't had a chance, make sure you put some of your questions into the chat room, and we'll try and get to as many of those as we can. But a couple takeaways from today, and again, I want to reiterate it. Again, it's the discipline, it's the trading plan. I hope that you can all can take that away and start working towards that. As Guy had said, that plan is to help prevent that emotional attachment, because I can tell you right now, if you're trading the US 500 at Nadex, the Tech 100, the Euro dollar, British pound, whatever the case may be, you're not getting a Christmas card from that trade. I'm sorry. That trade doesn't know who you are, could care less who you are. It's just a bunch of numbers on the screen. So there's no reason for you to have any emotional attachment to it whatsoever. Any follow up on your end?
No, 100%. I mean, it's so funny you say that. I mean, that's something I've been saying for years. You know, those instruments that Travis just talked to, but just individual stocks, and I just sort of bring it back to stocks. And I hear this all the time, and I want to scream, you know, but people will say, you know, Apple's been so good to me over the years. I will tell you without equivocation that Apple doesn't know you exist. They only care about you in so much as you buy their products. And make no mistake, that's the hard and fast truth. So when I hear people say that Apple's been so good to them or Disney's been so good to them, you know, trust me when I tell you that they care about you only in so much as that you're buying their products or they're using their services. Outside of that, they're not really interested in Guy Adami or Travis McGee or any of the, you know, few hundred people around with us today. So just sort of wrap your head around that, number one. And Travis, I think, really hit on something. They're letters and numbers on a screen, basically what it comes down to. And when you realize that, and when you take sort of that dogma that we're all guilty of having out of it, I think you're going to find you're much more successful and you're able to move on from things a lot easier because you don't have that emotional attachment to things that, quite frankly, have zero emotional attachment to you, T.
Absolutely. So let's start tackling some of these questions. We've got a slew of them in the box, and I apologize. We'll get to as many of these as we can, obviously, as time permits. But I'm just going through a handful, and quickly I'll answer some of these. There were a handful of questions about Ray Dalio and the name of his book. The book is Principles. So if you get a chance to read it, it really is incredible. Ray Dalio has an amazing story, backstory. It hasn't been all easy for Ray Dalio. A lot of struggles in life, a lot of struggles with his family, mental health struggles, so on and so forth. Great book, a lot of good key lessons, just in general, how to be a better human coming out of that. One of the questions to you, Guy, was with regards to a trading journal. And, being new to trading, what would a basic trading journal include? If I'm Guy Adami, what would I have in my trading journal?
Yeah, I think that's a great question. I appreciate that you folks are taking the time to ask these questions. Write stuff down. Today, December 17th, these are the things that were actionable in terms of the market. Bitcoin surpassed these levels. Everybody seems to be talking about the US dollar. So just take notes, and then during the day, take notes vis-a-vis, what the day started like. Okay, it's noon now. Bitcoin is giving back half its gains. And it might sound glib, but over the period of time, days become weeks, weeks become months, and then you can go back and look. And the reason why it's important to go back and look is because things tend to repeat themselves. So you might have seen a pattern 3 weeks ago. You can go back to your journal and say, wait a second, I remember writing this down. What happened? And then you can start to build a knowledge base on the back of the things that you've written down for yourself and the things that were important to you. And today I traded this binary option and this is how it worked out, or this call spread, or this knockout. And it just helps you to remind yourself of what was taking place on that specific day and how you reacted to it. Now, there's nothing special about me. Travis can attest to that. And if you brought my 3 kids and wife in here right now, they'd say the same thing. One thing I have been able to do over the years is I can remember things that happen. I can remember chart patterns. And in my mind, I say, I remember when ExxonMobil traded down to 31, and then it tested that level again. And I can visualize the chart in my head, and I can see where it's gone from then. And then that pattern recognition finds its way into what am I doing today? And wait a second, I'm seeing this pattern in natural gas. And I remember seeing it in ExxonMobil recently. Will history repeat itself in a similar way? And it tends to do that. So writing it down helps a lot. It creates pattern recognition. It creates an archive for you to go back to and look at. And I think it's just going to make you a better trader, in my opinion. I think it's really important. Hopefully I answered that question.
Absolutely. And we get a couple more here. Try and move through these relatively quickly. So another one, and I'm just going through the chat panel. It seems like there were a few on preparation and what preparation entails. So I'll say from my vantage point, preparation, first and foremost, if you are going to trade something that you know. Trade something that you're passionate about. Do not trade something because you're at a dinner party and your friend talked about it. He said it's a really cool company. If you know nothing about what that company, that index, that commodity is, you shouldn't be trading it. Trade something that you know, because by and large, when you trade something that you know, you're going to have a little bit of passion about it. And with that passion, you're going to do more due diligence. You're going to have the energy and the motivation to go in and do homework. Preparation is homework. It's just like studying for an exam. You've got to put the time and the effort to understand various outcomes that could happen. What happens if earnings do this? What happens if the Fed does this? Where does the dollar go? Where does the pound go? What happens to the indices? You have to put that preparation in to prepare for all of those outcomes. That's the preparation bit. And by going in and trading Bitcoin because it sounds really cool and your friend's trading Bitcoin and you know nothing about it, you're going to get burned more often than not because you don't understand all of the dynamics around that trade. So I will say again, and this is even for the veterans out there, but certainly for you folks just now making your foray into trading, start with something that you know, something that you enjoy. If you're passionate about technology and Apple at Nadex, perhaps that's the Tech 100, the NASDAQ, right? It's a correlation between the two. If it's, you know, the global economy, you could look at something like the S&P 500. If the Fed and central banks and the disparity between currencies across the globe is something that interests you, you know, the excitement of FX may be your cup of tea. So, but again, it's that preparation. Trade what you know. It was solid advice that was given to me day one. I don't know about you guys, but it's worked out for me thus far.
Makes perfect sense. And just, you know, to drill down again on preparation, that's the hard part, right? I mean, that's the practices before a game, right? And for me, in my preparation, that's all the reading that I do prior to our show at 5 o'clock Eastern time every night. And, you know, people will say, how are you able to remember what, you know, Intel said 3 weeks ago, what analysts upgraded Caterpillar? It's because of the preparation that goes in. It's not because there's nothing special about me. And that's the hard and the boring part. And what I tell people, what I'll tell you folks is natural curiosity takes you a long way in life. So you wake up in the morning, you start to read about something that maybe you're interested in, and then 45 minutes go by and that thing you started reading turns into third, fourth iteration of something, and you start to build that knowledge base. And, you know, it gets easier over time, but it's not easy all the time. So, but it's mandatory. Trust me when I tell you, there are nights where I want to mail it in when I go and do the show at 5 o'clock. And if we make it to January, it's 14 years on air. And just some nights you're just not feeling it, like in any job or anything in life. But, you know, there's a responsibility associated with it to do the work, the same way there's a responsibility when Travis was a Marine to put in the time, the same way there's responsibility to you as a trader to put in the time, because, you know, the trading, the trade entry, to me, that's sort of the cherry on top. That's the game. It's everything that goes into it to get you there to be successful. Hopefully that answers that question, T.
Sorry about that. Yeah, last question here before we wrap things up. A couple questions with regards to trading versus investing, and we noted on this at the onset of the webinar, and a couple of the questions around two in particular around, hey, I'm a senior, I'm looking to generate income, you know, how can I do both? Well, there is a way you can do both, but you have to you have to have that discipline to be able to basically position those two styles in different, basically different mediums, right? So with the investing side, absolutely. You know, if the wealth management, a robo advisor, whatever the case may be, is your cup of tea, absolutely. And perhaps that's the largest part of your portfolio. So when you look at your capital and what you have and what you're putting out in the market, you should look at everything and be able to section that off and say, hey, 85% of my capital I'm putting into, you know, a wealth manager, robo advisor. This is my retirement. I want to build that long term. That's my long term portion of portfolio. Don't touch it. Don't touch it. This portion here, this 10%, this is my trading. This is the trading bit of my portfolio. This is what I'm using at Nadex, right? This is what I'm trading with. And that I use for that. And then whatever earnings above that, I continue to use that bit. But I've had a very disciplined approach in that I'm taking everything that I have and I'm putting it into very distinct sections and segment it off. What happens, again, more often than not, is individuals will go in and they'll start trying to trade their 401k, or they'll start trying to trade the entire bucket instead of having that discipline. So you can do both. You can do both, and you should. I mean, you should have that long-term view, and then understand in your own mind. And again, this is comfort level. Only you know this. I can't tell you, this guy can't tell you. There's no one on the street who can tell you what you're comfortable with, what your risk level is. You have to understand your risk level, and you have to assign that risk level to your trading. When I trade and what I'm trading with, I will only trade with an amount that I know if I lose every penny of it, I'm going to sleep well at night and I'll be okay. I'll never trade with more than that. And if that's me though, that's my rule of thumb. If I can sleep at night, then I know I'm okay with what I'm trading. If I can't sleep and I'm up worrying about it, I'm in a really, really bad spot.
Yeah, and let me get and I'm glad that the question was asked, and I'm glad you answered it. And this so maybe, hopefully, let me try to be clearer than I might have been 40 or so minutes ago. My point is, it's very hard to wear both hats, because for the vast percentage of people, those buckets start to commingle. A bad trade becomes an investment, and then you move it here. An investment that goes well right off the bat becomes a trade, and you start to commingle these buckets, which you shouldn't. There should be some sort of line of demarcation that regardless of what's going on, you're not going to cross that line. And I guess my point is, that's a very difficult discipline to master. But I think it can be done, to Travis's point, but you better understand that never the twain shall meet, as they say. Like, those buckets should not find themselves into the other bucket, because once you start doing that, it's all going to go pear-shaped very quickly, in my opinion.
Well, Guy, it's been an absolute pleasure. Folks, I hope you found this useful. Ian, there's more to this than 45 minutes of discussion. Again, some of the key takeaways: make sure that you work on that trading plan, work on that preparation, work on that disciplined approach. Again, the name of the game is longevity. You want to stay in as long as you can. So with that, I'm going to kick it back over to Todd. Again, Guy, much appreciated for today. We do have 2 more sessions today, folks. Again, we're going to talk a little bit about the tools of the trade. And then in the latter part of the day, the last hour, we're going to get into practical application trade setups and the like. So with that, Todd, I'll kick it over to you. Guy, thanks again.
Thanks, Travis. Thanks, everybody, for joining. Really appreciate it. Have a great holiday. Thanks, everybody.